Ladies and gentlemen, good day and welcome to the Ultratech Cement Limited Q1FY24 earnings conference call. We must remind you that the discussion on today's call may include certain forward-looking statements and must therefore be viewed in conjunction with the risk that the company faces. The company assumes no responsibility to publicly amend, modify or revise any forward-looking statement on the basis of any subsequent development, information or events, or otherwise. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Atul Daga, Executive Director and CFO of the company. Thank you, and over to you, Mr. Daga.
Thank you so much. Good evening, everyone, and welcome to the Q1FY24 earnings call for Ultratech. This is the third year in the running seeing a high consumption of cement. Going by the positive movement seen in the first quarter, we are excited to see a double-digit growth in volumes this year as well. You are aware of the erratic heavy monsoons that we have seen earlier on during the last couple of months that have hit almost all the regions in the country, resulting in disruption in dispatches early on. But the good part is that the fear of El Nino seems to be subsiding. Things are going well for our economy. FDI is gaining momentum. Inflation seems to be under control. Fuel costs for cement are on the decline. Interest rate hikes have taken a pause. Infrastructure in India is improving rapidly. What I can quote as one of my friends said, gods up there seem to be Indian. I want to share some more data points on road infra in particular. The government has given a directive to spend almost 80% of the budgeted allocation of 2.7 lakh crores by December 23. Almost 1 lakh crore has been spent by mid-June. Balance spending of 1.2 lakh crores, as was advised by the ministry, will be completed on schedule. They want to achieve a speed of 40 kilometers per day of road construction this year. They will most likely reach the targeted kilometer per day, going by the speed at which the execution is taking place. This quarter was the highest road execution progress, though new orders were less, but we don't get bogged down by slowing down of orders, which is, to my mind, very temporary. Because it's not just the roads, it is the good infrastructure has a cascading effect on overall economic activity in the country, and cement gets to participate in the growth story. Let's talk about our own work. We have commissioned 4.3 million tons of capacity till now, including beyond June as well, and our cash flow seems to be in good shape. These new capacities will further strengthen our presence in the northeast and western markets. As for our cash flows, after a cash spend of 1796 crores on our ongoing capex in this quarter, we have further reduced our net debt by 233 crores, which I think is a fabulous achievement. We have completed the first phase of our expansion plan, which was announced in December 20, taking our all India capacity to 131.25 million tons. During the course of various expansion programs, we have identified some debottlenecking opportunities which will be completed during this year, giving us an incremental capacity of 4 million tons. This is spread in 4 or 5 locations. As we complete, we will keep on announcing them. We expect, as I mentioned, we should be able to complete all these programs within this financial year, taking our overall capacity from 131.25 million tons to 135.25 million tons in India. Another very important point to note is the improvement we have made in our clinker conversion factors. I have specifically included a chart in our presentation. An improvement of 0.04 will generate an additional volume on an annual basis of 3 million tons. let me now talk about our sustainability agenda, and we take it very seriously. We are fast-tracking our green energy program. For that, we are participating in a hybrid solar-wind project of 648 megawatt, taking our total renewable energy baskets to 1.25 gigawatt when the program is completed. And also, we intend to increase the footprint of our WHRS to reach 425 megawatts from the 232 megawatts that we ended Q1FY24 with. These programs will be completed by the end of fiscal 26. And when all these projects are completed, I'm happy to tell you that we will have more than 60% of energy as green energy on our expanded base. WHRS accounting for more than 25%, around 25%, and renewable energy, which is solar and wind, accounting for more than 35%. Depending upon the prevailing cost structures at that point in time, it will still be a sustainable addition to our bottom line. Some 2 points which I want to bring to your notice more from academic interest point of view. Firstly, on fuel prices. Today, petcoke is trading around $115 per ton after a short fling with $100 level for a very few days. However, most of the time the spot prices are for ship loading, which is 2 months hence, average 2 months later, and give a 45 to 60 day shipping time, 10 odd days of inland movement, and existing inventories of anywhere between 45 to 60 days. It gets into consumption maybe around 5 or 6 months later from the date you are talking about the booking the contract. Second important point to keep in mind is the moisture loss. For us, the landed cost is almost 10% higher on account of moisture losses, which is what we consume and what we report. Last quarter, on a net basis, our cost was $194 per metric ton, which has reduced to $178 per metric ton for this quarter. Depending on the availability of petcoke, we keep on optimizing the fuel mix. This quarter, our petcoke mix was about 42%. Another point for your academic interest, this is about lead distance. At Ultratech, you would have heard our lead distance being more than 400 kilometers. To be precise, last quarter we were at 410 kilometers. But an important point to note is that this lead distance includes lead distance for movement of clinkers from the integrated plant to the grinding unit. More important to keep in mind is our ability to serve our customers. With the current network of our grinding units, bulk terminals across the country, more than 120,000 channel partners, and a dense network of warehouses that we have, our lead distance from the point when cement is available to service the customer is only 270 kilometers. This has come down from 281 kilometers last quarter. And I think this is a real lead distance for our customers. So we are practically able to serve any customer around the country within 300 kilometers of our servicing point. And that's why I say we continue to lead by a mile. Thank you, ladies and gentlemen, and over to you for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi. Good afternoon, Mr. Agar. Thanks for the opportunity. So, the first question is around the new tax regime. So, have you moved to the new tax regime for all entities, like including Nathdwara?
Yes.
Okay. And on the fuel cost, like while the consumption cost was $178 in Q1 and spot you said is $115. So by Q3, we should expect, like, assuming 150 continues, we should assume 115 to flow through by Q3, right?
Yes. So 115, if it's a price, you would mark it up for moisture losses. So consumption will be $125 to $130.
Okay. So what
incidentally, today already it is $120, $125. So.
Okay, understood. And what would it mean directionally for your power and fuel cost, let's say either in rupees kcal terms or as a percentage?
2.34 was our kcal cost this quarter.
Okay. And like assuming like petcoke of 115, like should it go down to like 1.7, 1.8? Like 115 would be, I guess, 1.
So it inch downwards. I haven't done the math because the mix will also have a play.
Yeah, I would like to add here the cases from Ultratech. See, the availability of petcoke is also not too high because 115 to 125 days happened within a week's 10 days time. And as you all know, the availability of the petcoke is very limited actually, and it's coming, major part of the petcoke is coming from US. So again, there is a time of, cycle time of about 60 to 65 days and so it's all depend how much, what kind of prices stepped out going forward.
You know, Amit, to add further, it's a very dynamic situation. I had seen one data point and which I can share with everybody. The heat wave which is going on in China and most parts of the Europe, the coal consumption is going up. Last year, China generated the highest ever power from its coal sources, and they are still consuming only captive coal. Our philosophy, our hypothesis that as and when China opens up and they will start importing sometime soon, costs may not remain at these levels.
Okay, understood, sure. And thirdly, on this blending ratio of 1.44x that you've achieved, like, can we now expect like 1.5x maybe a year and a half?
It will improve. I'm not able to quantify, but it will improve further.
And also, infra is taking now blended cement?
Very minuscule.
Okay, understood. And just the last one from me. Like, you've already achieved 90% capacity utilization in Q1. So, like, as we gradually get into Q4, which is 3 quarters down the line, but commissionings, I believe, mostly are happening later in 25 and on. So, could there some capacity tightness or unavailability of some capacity to meet?
No, I think, as I also mentioned, there will be surplus cement available from our increase in clinker conversion ratio, the debottlenecking, which will give me additional 4 million tons of capacity, and we will try and bring in some more capacity at a much faster pace. As and when we are ready, we will let you guys know. But I don't think we will fall short of capacity. We will not lose a single customer.
Got it. Thanks. I'll come back in the queue.
Thanks.
Thank you. We have the next question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Good afternoon, and thank you for the opportunity. So first question is overall, a very strong growth in this quarter. If you could just share what is the sense, what would have been the market growth, and I believe it looks like we have gained market share. So in case you can add some regional color as to which region we have outperformed quite substantially versus peers or the industry.
I think we would have done pretty well across the country because, again, 89-90% capacity utilization, which means average 85% plus utilization in most markets. The only market like South where our base is small, so we would have lesser impact. As compared to that, practically everywhere we would have outperformed by a mile.
Okay, so what would be the industry growth as per us?
Too early to comment. I would wait for some more results, but certainly, like last quarter, there would be a wide gap between us and the industry.
Okay. And given our pan-India presence, 20% growth, in some region we would have grown 15, 18, some 23, 24. So some regional color you can share, sir.
I just told you you benchmarked me with my capacity utilization everywhere. We are more than 85% capacity utilization. So the bigger point is that the entire country, all regions in the country, east, west, north, south, central, are seeing huge demand.
Okay. Got it. So second question on the prices. Do we expect the cost statement to drive margins, or we are entering seasonally weak period. So how should we see margins shaping up over next 1-2 quarters, given some pressure on prices that we should see?
We have seen marginal insignificant, not to rejoice or party, but we've seen price increases in north and west.
Some parts.
Some increases in the month of July. South and east are still not showing traction in prices, but from our perspective, when we don't have capacity available, our efforts would be to service our customers who are paying the maximum price.
Got it. If I can just ask one more question. Overall, in our growth over the next 5 odd years, if you look at last 10 years, inorganic has been a substantial part of our growth. But now we don't see our name participating in few ongoing acquisition opportunities. So is it that inorganic is largely behind us as far as growth is concerned, and future next 3-5 years it should be largely dominated by organic? Is that the right way to think?
So, one or two places if you don't see a name, that doesn't mean that you can say Ultratech is not interested. We evaluate opportunities, and of course, given the network that we have, network as in our physical plant network, unless an opportunity is value adding from both growth and profitability, we will not deploy capital in those assets. And yes, we will keep growing. So if not inorganic, organic will lead the way.
Got it. So in terms of market share, there is no constraint. We can still grow inorganically. There is no.
Yes, barring I would imagine west. No, not west. Sorry, east, where because the inorganic target sizes will be large, so we will be hitting some roadblocks in east. Barring that, I don't see a challenge anywhere in the country.
Got it. That's very helpful. All the best.
Thank you.
Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much, sir. So my first question is on pricing. Now, earlier in the morning, one of your competitors highlighted that Eastern India, they have lost market share and they want to prioritize volumes over there. Now, East India is also seeing a lot of new capacity come through. So in terms of pricing, particularly for East India, what is the company's outlook for the same for the remainder of the year?
Well, I think we have mentioned earlier also East, with the given the kind of growth the Eastern markets have and the new capacities coming in, East will continue to remain a very tight market in terms of prices.
Understood. So my second question is that I'm just trying to understand the energy cost math better. The slide mentions $178 as the consumption cost in Q1, which at today's petcoke prices works out to around $125. That's a broad 30% decline. Now, petcoke is broadly 40 to 50% in terms of the overall energy basket. If petcoke prices were to sustain at today's level for the remainder of FY24, should we assume a 30% energy cost decline, or will the overall energy cost decline be lower than this headline petcoke cost decline because of the other fuels?
Yeah, see it all. If everything remains status quo, and let's say today petcoke prices are at $125 and that prevails throughout, then obviously you would see it translating into a 20% to 30% decline in energy costs.
Understood.
That is again, Pinakin. Now, if you're talking, I try to explain the math around it. Spot means 2 months forward loading, blah blah blah. So today's spot, which is what July end, will come into consumption only by January. So that's how the maths stack up.
Understood. This is very helpful. Thank you very much for the color, sir.
All right.
Thank you. We have the next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good evening, sir. My first question is on your recent news flow around some change in clinker dynamics from BIS required for composite cement, and this also there was a news on passing on LC3 as a acceptable product.
You are not very clear and audible. Can you speak a little louder?
Yeah, is it audible now?
Yeah, better.
So I was asking regarding recent change in regulation or modification regulation on composite cement and then acceptance of LC3 as a product. How does that impact industry and ourselves?
So we are growing big in composite cement. Now composite cement requires 45% clinker. There are some players who are doing much lower clinker, which they will get impacted negatively. We have started with 45% clinker, so we are pretty bullish about it. Composite cement is getting very well accepted in the market. This is one reason why, one of the factors driving our improvement in our clinker factor. Also, composite cement is still not settled down across the country. So as it settles down, you could see a further improvement in clinker factor.
Coming to the LC3 cement, I think it's a long story because as of now, there is no identified large deposits where the cement plant can be set up based on the LC3 deposits actually. And obviously, it requires a little high investment compared to the normal conventional cement plants. So yes, it is good for future, but I don't think anything is likely.
4-5 years, nothing?
Yeah.
So no, nothing. You might not see anything Pinakin for the next 4-5 years.
Sure. And the second question on other expense. So there was some increase in other expense, 4 to 5% on a quarter-to-quarter basis, while volumes were actually lower. So is there any one-off expense which was part of this quarter and was not part of last quarter?
Advertisements were a bit higher. Anything else? And
Q4 maintenance was
so Q4 maintenance was lower, and this quarter the advertisement and maintenance costs were higher.
Okay.
Nothing, no one-offs. These are routine expenses.
On freight expense, you mentioned in a PPT that it had an impact because of the cyclone in West Market. So is that only which is reason for increase on Q&Q basis, or?
Yeah. That was one-off impact. I wish Biparjoy would not have been there. We would have rocked the market with another 30 million tons of sale.
Sure. These are my questions, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my first question is,
Sorry to interrupt, sir, but the line for you is not loud enough. If you could please use the handset and speak closer to the mic, it would help.
Is this better now? Hello?
Ashish, you're not very clear. There's a lot of static noise.
I will just dial back.
All right.
Thank you. The next question is from the line of Indrajit from CLSA. Please go ahead.
Hi, good evening, sir. A few questions from my side. We have reduced our usage of petcoke. Is it just because of availability, or on landed basis, coal is now cheaper than petcoke for us?
Availability. So landed basis petcoke is far cheaper in energy terms, which is quite unusual. It's more about availability of petcoke.
And what would have been our alternate fuel usage in this quarter?
Alternate fuel was how much? 5%.
And how do we see that, progressing?
So, yeah, we have taken a target to go up to 9 to 10% by the end of next fiscal year. A lot of investment was required, which we have taken up in this financial year, close to 250 crores. Close to 250 crores of investment is happening in this financial year for shredders and feeding systems, handling systems for alternate fuel, and accordingly we are tying up also for alternate fuel.
Sure.
If you look at it in volume terms, it's more than 1.2 million tons of alternate fuel that we are already handling on an annual basis. That's huge volume. But anyways, as a percentage is what it is. So.
Yeah, no, that makes sense. And given that we have now embarked on a small 4 million ton debottlenecking, any change in our capex plan, or what would be our capex?
No. This will not have too much of capex, so it's all within my capex plan.
All right, that makes sense. Thank you.
Thank you.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Mr. Daga, a couple of questions. One on the entire renewable energy mix. Just want to understand, would Ultratech, I know this is a subsidiary administered by renewable energy, but would the group or Ultratech be putting capital for this, or would you buy it from outside? And based on where we are, what is the cost difference between the power you get from these renewable assets versus your own CPP? I'm not sure these would replace CPP or grid. So any difference in costing?
Yeah. So first and foremost, we will do a group capital scheme. So we have to participate with about 297 crores of equity into the SPV. And the second question that you asked was about pricing. So effectively, and because we are supplying power to multiple states, average cost, landed cost, because there are transmission losses, open access charges, average landed cost would be around 5.25 per unit. As compared to that, the cost of power currently would be around $8, 7 to 8 rupees per unit.
7 to 8 is both CPP and grid?
Yeah, I'm talking about average cost of power for our individual units.
Okay. Secondly, on the capacity expansion, one of your peers has talked about accelerating their target that they had earlier for capacity. I know Ultratech has also mentioned sometime back a 200 million target figure. Now that you have visibility for the next couple of years, would you also look to accelerate, given all the volume growth, market share gain, those targets beyond the current one that you have?
No, so as we mentioned, we are reaching 155 plus 4 more, let's say 159 already, and we will announce perhaps this in the, maybe if not September, this is June quarter, September quarter or December quarter for sure, our next phase of growth, which will take us further up from 155 upwards. So we are not going by what peers are doing. Our game plan is very clear. We see India as a growth market and we are investing behind growth.
Okay. Thank you so much, I wish you all this.
Thank you.
Thank you. We have the next question from the line of Sanjay Nandi from VT Capital. Please go ahead.
Yeah, good news, sir. Congrats on the good set of numbers. Hello.
Yes, please.
Yeah. Sir, can you please guide us what kind of drop in the petcoke prices we can visualize in the coming quarters? Just a kind of guidance.
Very difficult. If you can tell me what the index will be 2 days hence, I will tell you what the price will be. Can you? It's very volatile. To be honest, it's very volatile.
Got it.
Within 10 days, the prices have galloped from 110 to 125. It can come down also, it can go up also. I have no idea.
Got it, sir. Thank you, sir. Thank you for so much for the answer.
Thank you.
We'll come back in next year.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. So on this next phase of expansion, in the last 2 phases that you've announced, we've seen that the capex cost per ton has been quite low at $65-$70 per ton on an average. Is it fair to say that the next phase of expansion could be like more greenfield and therefore the cost could be a bit higher?
No, we will, because it will be continue to remain a mix. And if I look at my next phase, which one is green? One. वो तो अभी आ रहा है ना? So I think I was just doing a mental math on what is happening. So it will still be a mix of green and brown, and cost will be very competitive.
Got it. And I think earlier you had mentioned that you have a target of 200 million ton capacity, of which you are ready for 185. So, like that number still holds, or the potential?
Yes, absolutely, bang on. So we will clearly, by 2030, we will surely anywhere between 28 to 30, we will reach a 200 million ton mark. And as I mentioned, the blueprint of our next phase of growth, the phase 3, if I were to call, is almost ready. It will go to our board perhaps next quarter. We are giving it, final touches. Hopefully, it goes to the board next quarter, and I can announce it next quarter.
Oh, got it. This is helpful. Thanks. And also on Super Dala, is there any update or timeline for the arbitration?
Arbitrations never have timelines. It can go on for pretty long.
Okay, understood. And lastly, on the FY24 capex, can I just have a refresh on that number? What is the capex guidance?
It will be anywhere between 6,000 to 7,000 crores.
Okay, that's all. Thank you.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. So you had to explain some time back how we are running at high capacity utilizations, and we would endeavor not to lose out on customers, and that's not a bad problem to have if the demand is so strong. Now, given the fact that you are at such high capacity utilization, can you give a 12 to 18 month roadmap of how prices are going to head? I understand it's difficult to predict in the near term, but any sense on?
They will send them, Pulkit.
Mm-hmm.
They will send them.
Okay.
I have seen, so the undercurrent, if I can be candid, the undercurrent in the heavy monsoon months, we have seen price increases happening, which is never heard of. 2-5 rupee हुआ है, sorry, 2-3 rupee or 5 rupee increases have happened in certain geographies, and they are sticking, so which is good enough. That's what I'm saying. The undercurrent is very strong, and you are talking about 18 months, I am talking about 9 months. January, March will 24. The election, new capacities available. We will ramp up and we'll bring in some more capacity. I already told you about 4 million tons coming in this year. Some more capacity. We are working breakneck speed. We might try and commission some of our capacities earlier. Markets will be very strong, which will entail price improvements.
Got it, sir. Let's hope for that. So my second question...
Don't hope. I'm telling you it's going to happen.
Okay. That's reassuring. My second question is, if I look at your presentation, is it fair that this quarter you've seen the trade has grown faster than non-trade?
I don't know how you are saying that, but...
I read 26% growth, I think, non-trade.
Yeah. So I mentioned that statement. I've given you an additional data point that rural markets, trade market, rural is 65% of trade, and that is growing at 24%. So trade is growing at a much faster pace.
Okay. Thank you. Thank you for both those answers.
You should catch up.
Sure. Thanks.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my first question is, on the fiscal 26 green power number that you gave of 1,200 megawatt. So that 60% that you said is not on operational basis, right? That is more on your capacity share, I guess. And
I didn't understand. So you see on if I am consuming I require 1,000 megawatts of power, I will have 60% as green power.
Okay. Based upon this 1.2 gigawatt that you said you will.
Yes, we will reach 1.2 gigawatt of renewable energy and 425 megawatts of WHRS. Both are green. For 155 million tons, how much power will be required? About 1200 megawatts of power will be required. So 720 megawatts will be green energy.
Got it.
And that will be highly remunerative. Nobody asked a question which is very good.
Right.
Yeah.
And so secondly, in terms of capex, what is the capex we will need for this? Is it just this 300 crores that you said, the equity investment, or?
Yeah, that will be our participation.
Okay, got it. So secondly, in terms of, so on clinker, are we operating close to 100% utilization now, given, on cement basis itself, we are at 90% for the quarter. So can you give some sense of our clinker utilization?
It's more than 90% for sure.
Okay.
Ashish, it's more than 90%.
Okay. Got it, sir. So lastly, on power, I just wanted to ask, sir, given our view on power, are we today, heavily booking petcoke at the prices available, given it is clearly attractive pricing, or we are still sticking to whatever strategy we have in terms of booking?
No. So, we are also dynamic. I have increased my inventories. March quarter, we were at the end of March quarter, we were 38 days of stock. Today we are at 58 days of, we ended the quarter with 58 days of stock. So we are, because as I mentioned, if you heard me about China, I still feel China might start importing.
Right.
So prices could rise in the near future.
Right. And sir, for the balance, 58% of our fuel outside petcoke, what is the price trend there? Because I think that is mostly imported coal, right? Or is it apart from the
Maximum is imported coal. We also have our FSA, which is that, the linkage coal. But maximum is imported coal. If I were to look at percentages, just 1 second. Where is Koila? Fuel mix, TPP. Just 1 second. Where is it? So 46% is imported coal, 7% indigenous coal, 42% pet coke, 5% alternate fuel, and lignite.
Got it. Okay, great, sir. Thank you so much, and best of luck.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Most of the question has been answered. Just a couple of things. First, in terms of the WHRS, so currently 232 and we said 425 by FY26. So by FY24, 20 and by FY25, if you can help us how much more we will be adding?
We will have year-end number have ke paas. What will be the year-end WHRS this year? So FY24 will reach 300, and I think between 25 and 26 the remaining obviously.
Okay, and same way in terms of the solar and other.
Yeah. So maximum will come by end of 25.
Sorry, sir. By end of FY24, how much more?
By end of 24, which project? There is maybe 100 megawatts more is in pipeline. 60 to 100 megawatts is in pipeline before March 24.
Okay. And for this WHRS, so when we say 6 to 7,000 crore capex for this year and next year also, I believe this also includes the capex for the WHRS.
Yes, absolutely. It includes my expansion capex, modernization, routine capex, WHRS capex, alternate fuel and everything.
Okay. And sir, when we say we are looking at double-digit volume growth, So is it fair to say that it should be mid-teen kind of a number that one can look at?
I will not comment on that. So I'm already giving you a guidance that industry will definitely see more than 10%.
Okay. But in terms of the considering the broader cost savings, including the lead distance reduction, everything, on broadly and the plus now the power and fuel. So broadly from now onwards, we should be seeing improvement in EBITDA per ton on QoQ basis.
Yes, most certainly.
Okay.
I hope in spite of monsoons, maintenance costs, I think we should do well in EBITDA per ton.
Okay. But this quarter till now, since June, in terms of the blended realization for us, still we haven't. You mentioned that we have seen a 2-5 rupees hike in some places, but on overall blended basis, till now we haven't seen any decline in prices for us.
No decline.
Okay, that's great. Thank you, sir. All the best.
Thank you. The next question is from the line of Naveen Shahdev from ICICI Securities. Please go ahead.
Yeah, hi.
Yeah, Naveen. Hello? Can't hear you.
Sir, the current participant seems to have dropped from the question.
Yeah, you'll come back. Okay. Take the next one.
The next question is from the line of Bhargav Maheshwari from Asian Market. Please go ahead.
Sir, can you please break down the 648 renewable power into what kind of the solar and wind power in this?
200 is wind and 400 is solar, if I remember it right. Just give me 1 minute, I'll tell you. If you have any other question, then I can come back and tell you this.
Yes, sir. Sure. And sir, what is the blended mix for this renewable power at a blended level for this 648 megawatt? We are looking for a PLF generation for this particularly?
About 40-45%. And 200 megawatt is wind is 368, solar is 260.
Okay. And sir, last question is from my side for the next 1 and 2 year, where we are seeing the heavy infrastructure demand, primarily the non-trade in the OPC segment. How will you see the price difference between the trade and non-trade versus PPC, OPC? The gap between primarily non-trade and trade.
Stronger prices.
Any chances you will see for the gap reduced between the non-trade and trade further?
Trade prices will go up, yes. Non-trade is already high. The trade prices will go up.
Okay. No further increase in the non-trade is difficult? Prices in the non-trade segment?
No, I don't really know that. It all depends upon how the projects are coming up and how we can negotiate. Obviously, aim will be to realize more.
Got it, sir. Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Good evening, sir, and thank you for a good set of numbers. I only had one primary question to ask. That is, we have reduced on our lead distance. Could there be a saving which could have been reflected this quarter? Second is, we do have the benefit in terms of the clinker conversion, because I see in the presentation it's something like 1.44. So while I was expecting, that the fuel mix impacts, the reduction of the cost will actually be reflecting this quarter. But apparently, it's not to the extent that where I expected. Even if the prices had gone by 100 rupee per ton, the impact of the fuel reduction would have offset the reduction in the prices. So, the second quarter, obviously, you are saying that we will see improvement in the EBITDA per ton. So what all factors will actually contribute in the improvement of EBITDA per ton?
So first question was about lead distance. The benefits that we accrue because of efficiency improvement are eroded by the busy season surcharge was one, and any particular other thing else. That was one major item because busy season surcharge kicked in, eating away most of the improvements.
Is it are we not having a railroad mix of 70/30? I'm sorry, correct me if I'm wrong. And business season surcharge has earlier it used to be on a seasonal basis, but now it's full year round the year.
It's full year, yeah.
So will that actually, will that not be negated? Like this must have been factored in the freight cost.
No, so this adds on to my 30% road, and it's pretty high. I think 9 rupees. 30% rail. Sorry, on the 30% rail network, that adds on to my overall costs, which negates the benefits that we are able to achieve on efficiency improvement. Luckily, crude prices or diesel prices have not hardened over last quarter. Your last question, which I remember, was about what will be the drivers for profitability improvement. Of course, other than prices, you will have the benefit of fuel price reduction, logistics cost improvement, and the increasing green energy share, which helps my bottom line.
So will that really reflect in the second quarter number despite...
No, not second quarter. See, the green energy projects are coming up by FY25. The big project which we spoke about on this call will come up by June 25. That is where it will reflect. Second quarter, I would not want to comment because it rains. Third quarter, you will see the benefit of improvement in prices, followed by fuel price gain. Logistics, if there are some other levies which kick in or anything else, logistics will also drive home the benefit.
Prices, I believe, have been actually dampened by a lot of B and C players actually supplying, movement of a lot of cements across the region. So, I don't know. I'm sure you are that positive about the price improvement after festivities. I'm sure there will be some improvement in the price.
Yes.
And I don't think that will be more than 5 rupees per bag, if at all that happens.
If it is 5 rupees per bag on 100 million tons, we are selling 200 crore bags. So that's a huge amount of money.
But anyways, that will be negated by no improvement in your cost, because you say that the green power will actually come by FY25.
The big project of 648 megawatt will commission by June 25. There are several small projects which are getting commissioned during, as I said, about 100 megawatts is another project. Multiple small projects which are coming in during this year.
So effectively, we will not see much gain coming from the fuel price. In fact, just at my calculation on the composition, where, as you said, I have something like 46% on the petcoke side, 35%, 5% on the AFR, but looks like there is no improvement as such that we'll be seeing in the third quarter on the fuel side, isn't it?
No, we will see a significant improvement in fuel.
Sorry,
we will see an improvement in fuel because of fuel. Okay. Fuel prices or the power and fuel chart that you see will be a declining chart in Ultratech.
Yeah, because power, I believe, if I take a 72 unit and add 6.5, and if it goes steadily, decreases by 30 paisa or 40 paisa, I think somewhere there should be a significant gain of...
Yes, absolutely.
But that does not seem
Sorry to interrupt, ma'am. We request you to please rejoin the queue for follow-up questions.
Yeah, sure. Thank you.
Thank you. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question pertains to your RMC business. This quarter we have grown by 37%. This growth will continue for the remaining of the year?
I hope so, and I think it will.
Okay. And sir, how much currently RMC plant we are operating, and what would be our target for the addition of RMC plant in next 2 years?
232 plants are in operation. We hope to reach a milestone of about 300 plus plants by the end of this year. Yeah.
Okay, sir. That's all from my side. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Naveen Shahdev from ICICI Securities. Please go ahead.
Yeah. Am I audible now?
Yes, please.
Yeah, thank you for the opportunity. Sir, a couple of questions. One, on this debottlenecking of 4 million ton. So is that got to do with the increase in blending ratio that gives an opportunity, or we are having a commensurate clinker debottlenecking of roughly around 3 or around 2.5, 3 million ton, which will help get those volumes?
We have sufficient clinker, Naveen, and these 4 million ton is all grinding. These are all grinding capacities.
Okay. Primarily, so this debottlenecking is largely on the grinding side.
Grinding side, yes.
Okay. Then the other thing I just wanted to ask was about this other operating income. I see in this quarter it has gone up by almost 92 crore on a sequential basis. So just wanted to get some color. Is there any more booking of incentives that has happened this quarter, or is it because
normally consistent? No, there's nothing on income tax. There's no abnormal incentive. One second, my colleagues are just checking on it.
Meanwhile, sir,
it's okay. So Pali as a unit started getting its incentives, but that was 14 crores or something. That was only 14 crores.
Yeah. Okay.
Operating income. I think nothing. So it's volume linked, maybe. I don't really have an answer.
Sure. I just wanted to get a sense because...
Yeah, there's nothing abnormal.
Sure. I was just seeing that March volumes were higher and June was sequentially a little lower, but...
Yeah, sequentially lower, but nothing that comes to my mind which is abnormal, but I will just get the team to double check and Ankit will revert to you directly.
Sure. Sir, just one last bit. You said pricing, of course, is healthy in current market. In fact, some markets you said have seen an increase. So and the expected fuel cost benefits, demand continues to grow. So very broadly, for an exit FY24 Q4, last quarter of this fiscal, the EBITDA per ton that we could look at should be, would you guide something like 1,500 kind of a number for that March quarter, if, of course, things remaining same with the pricing and cost and everything?
No, everything remaining same, it will improve. I will not guide to a number, but it will be significantly higher from this quarter.
Great. But great set of results and thank you so much.
But Naveen, the point is everything remaining equal. Yeah, it's not a static world.
Yeah, of course, I understand that. But like I said, assuming
things are looking positive. That's the most important element.
Yeah,
but I think Naveen, my colleague clarified, it's generally incentives which have started kicking in the other operating incomes that you were asking.
Sure. So from an annualized, let's say from a quarterly run rate.
Yeah.
This 200 crore kind of a run rate going ahead?
Should be possible according to me.
Sure. And just one last bit, if I may repeat. You said pricing, of course, in current environment with demand being strong is, of course, looking good and it should pick up coming quarters. But next year, which is after the elections next year, typically demand may get a little soft like it happened in FY20. That FY19 saw 13% plus kind of a growth, but 20 was just flat. So if that happens, even in that scenario, would you be confident on pricing, or it's too far to talk about?
It's too far to talk about, but yes, I think the market generally soften also for a few months after elections.
Okay. Fair. But thank you so much for the opportunity, sir. Thanks.
Thank you, Naveen.
Thank you. Ladies and gentlemen, we will take that as the last question. On behalf of Ultratech Cement, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you so much.